Washington's clear-thinking headquarters. The Morning Majority, 5 to 9 on 630 WMAL.
8:37 on the Morning Majority. Brian Neiman, Tony Blankley, Mary Walter in this morning. Joined now by Larry Kudlow, host of the Kudlow Report. You can see him every night at 7 o'clock on CNBC. Also on the call, 11 o'clock in the morning on CNBC. You can hear him here on 630 WMAL Saturdays at 7 o'clock. Good morning, Larry.
Good morning, Brian. How are you?
Well,
hello to everybody else.
Hello, Lawrence.
Good morning.
Larry, you know that I watch your show every night, and you had a fun and heated discussion when it came to the AT&T T-Mobile merger. Now, listen, Don Luskin made the point. Everyone's laughing because they think I'm getting the weeds here, but I want to get your take on this because
it's interesting. We had a debate about the benefits and costs of something called an oligopoly. For your listeners, they probably know what that is. It just means a couple of firms dominate a whole industry. In this case, we're talking about the ATT bid to buy T-Mobile. So who's going to dominate broadband? Who's going to dominate cell phones, etc.? All right,
but my question was Don Luskin's point, which he said that this is the first mega-deal since the financial collapse, and one that is
that's where you're going with
it. It's a debt transaction, $39 billion, and his point was that major corporations and the banks are willing to go in and take the risk when it comes to these mergers and going into debt, which he thought was significant, thought was a green shoot for the economy.
His principal point there was that J.P. Morgan was willing to put up $20 billion in debt to help finance the deal, and they'd be giving it, of course, to AT&T. So that was the absolute key point. By the way, I think it is one of the biggest deals since the financial meltdown, probably the biggest deal. I don't recall that for sure. There's something that sticks out in my head, but I'm not sure. But the key point there was that maybe the large banks are going to start making riskier loans to finance business, and that's an interesting angle on this story.
Right. Then that was my point.
I don't know.
See? They're all looking at me like I got three heads.
You feel so vindicated.
J.P. Morgan is by far, I'm just going to say this, by far the best bank in the best financial shape. They did not need the TARP money, by the way. They didn't want it when it was forced down their throats. And they are one of the very few banks that are in shape to make this kind of financing transaction. I just want to add that. So it's great that it's happening, but I wouldn't necessarily make a blanket statement about banking in general. I just wouldn't go that
Larry,
far.
Tony Blankley here. Good morning.
Hi, Tony.
Hi. Yeah, I just read a few minutes ago your latest article, Q1 Slowdown Carried Emptor.
Yeah.
And I always turn to you for optimism.
Yeah.
And I don't know that I've ever seen as gloomy an article by you.
What's up with that?
Where you end by saying the world's not coming to an end.
Right. The world's not coming to an end. All I'm saying is...
Are you really this... I mean, for you, this is... For others, this is positive, but for you, this is so negative. You really think things are slowing down and inflating up pretty badly?
Well, it's less. Here's my point. This may be in the first quarter, ending March, and we won't know for a month.
Yeah.
This will be the fourth consecutive below 3% growth quarter.
Mm-hmm.
That's a lousy statistic for a recovery.
Yeah.
Go back to the worst recession since this recession, and that was the Reagan years, and they came out of that growing 7-8%.
Yeah.
And we're only growing at less than 3%. And it looks like, my point here is, it looks like the first quarter is going to be below 3%. Not everybody agrees with me. No, it's not the end of the world, but it's a lousy figure. We should be growing at 5, 6, 7%. That's really the key point.
Do the events in Japan? I've heard it interpreted all kinds of ways. Do you think of it as a short-term negative for the American economy?
I do, but a very short-term negative.
And by what do you mean by very short? I mean, months?
I think it'll probably be the so-called supply chain shortages and things that Japan manufactures, but obviously because of their disaster, they're not manufacturing right now. We'll take a little bit off of our growth in March and probably April. Maybe May. I don't know. My crystal ball is not good.
That's pretty short term.
But it's pretty short term. The biggest factor, what seems to be going on, is the spike in gasoline prices. And that has caused a big drop in consumer confidence and a big increase in the consumer price inflation rate. And that is going to take probably half a point off of economic growth and add at least a half, maybe a full percentage point to inflation. In fact, the CPI is probably going to grow by as much as 5% at an annual rate in the first quarter. That's really my point. And that the Fed and the Treasury continue to let the dollar drift lower and lower because of the QE2 pump priming on the part of the Fed. And that means you depreciate the dollar. Commodity prices like food and gasoline and energy and so forth all go up. We're seeing that in the consumer price index, and it's very damaging to consumers. And, oh, by the way, it's going to hurt corporate profits. It's going to hurt corporate profits because wholesale prices, all those raw materials they have to buy, that is going to cut their profit margins. So, no, it's not the end of the world, but I'm just saying another less than 3% quarter is not good. We can do better. And incidentally, there's a whole conference up here today sponsored by the Wall Street Journal editorial page and the Free Market Manhattan Institute, and a bunch of us are going to speak, old Reagan guys. What about growth policies? What about economic growth policies? Limited spending, lower tax rate, full overhaul of the tax code, stop the regulations, end Obamacare, and for heaven's sakes, stabilize what I used to call king dollar. We need to grow this economy, not only to create jobs and produce better output, but also it'll help the budget. Growth solves a lot of the budget problems. So that's really going to be the point, and that's kind of the point I was making.
Are you going to send the transcript down to John Boehner? It sounds like a message they could use down here.
Well, it's a sort of a generic message. Now, our friend Eric Cantor is out on the West Coast at Hoover, I think, giving a pro-growth talk, I hope, today, because I've spoken to him about this. And I interviewed Speaker Boehner a week ago down there in Washington and asked him the very same question. And, he says, yeah, we are trying for growth. We are going to have a more full-flowered growth policy. But I think that's what we need in this country. We don't have it yet, and we should be growing much faster than less than 3%. I mean, 2.8%. That'll be the fourth straight quarter, for heaven's sakes. That's not going to do anything to get America's economy going again.
Now, Larry, what I've learned from listening to this conversation is that I'm not going to have a job because corporations, their profits are being slashed. If I wanted to go look for a job, I won't be able to afford the gasoline. I'm not going to be able to afford food, so I'm going to have to raise and slaughter my own chickens. And so I probably should just buy stock in Prozac. So that's the one tip. That's the only bright side to this entire conversation is I got a stock tip out of the deal.
But you're on your own in the Prozac. That's all.
Donald Trump is out there saying gas is going to hit $5 to $7 a gallon.
Yeah.
You agree?
I really don't at the moment. But look, the Donald and I had a long interview last week.
Right.
We've been playing bits of it on the show each evening, and he has a growth message too. I mean, he wants to provide tax incentives to corporations. He's very cross at China. No surprise, he's been on that for a while. He's very cross at China, and I agree with him, at least in part. I think they do not reciprocate on our free trade. He had a very controversial point. He believes, follow me on this, stay with me on this, he believes that Iran is going to take the Iraqi oil fields. Okay, he believes that. And therefore, the United States must take the Iraqi oil fields over before Iran takes them, and that to the victor goes the spoil.
I thought we already took them over.
Preemptive strike on the oil fields?
It's a very interesting thought that Mr. Trump is developing. And I said, you mean we're going to go in, what, take them, nationalize them? What are we going to do with them? And he didn't really say except to say that he was more conservative than I am, at least on foreign policy. So, all right, I'll leave that where it is. I think we got enough trouble going
Just
on.
quickly, yes or no, do you think he's going to run for office?
I sure think he's leaning towards it.
Okay.
I really do.
All right, Larry.
I think you look at his polling numbers, name ID, he's got a lot of advantage.
I know he does.
He's got money, too.
Yeah, he does. All right, Larry. Always great to talk to you. Thanks for coming to the show. We'll be watching tonight. Larry Kudlow, host of the Kudlow Report, 7 o'clock CNBC. You can hear him on the radio, 6:30 WMAL Saturdays.